video, I'm going to share with you how China's rise is impacting German industry and what it means for the global economy. Let's get into it. Hey friends, welcome back to the channel. I'm Iggy here, and as you know, I've been covering topics such as stocks, finance, CPF, and basically everything related to growing your wealth. The Investing Iguana is featured and ranked 8th in the 2023 Influential Tigers by Tiger Brokers, with over 800,000 reads. I've also covered over 600 videos and over 280,000 watch hours as of November 2024. Today, we're diving into a topic that's shaking up the global economic landscape. Germany, once hailed as an industrial powerhouse, is facing a crisis. The country that was once praised as the best Germany the world has seen is now struggling to keep its industrial edge. This shift has huge implications for the global economy, and it's opening doors for countries like China to step in. Let's break down what's happening. Germany's economy has been stuck in neutral since 2018. It's not growing, and worse, it's losing its industrial strength. This is a big deal because Germany has long been Europe's economic engine. So what's causing this decline? It all comes down to energy. German industries are paying through the nose for electricity. It's nearly twice as expensive as what American companies pay, and 3 times more than what Chinese factories shell out. This isn't a new problem. It's been brewing since the early 2000s, but things took a turn for the worse in 2011. After the Fukushima nuclear disaster in Japan, Germany made a bold move. They decided to ditch both fossil fuels and nuclear energy. This plan was called the Energiewende, or Energy Revolution. The idea was to switch to renewable energy without losing their industrial edge. It was a big gamble, and sadly, it hasn't paid off. To make matters worse, Germany had been relying on Russian gas to keep its industries running. This dependence on Russian energy has been a sore point between Germany and the US for decades. When Russia invaded Ukraine in 2022, it sent shockwaves through the German economy. Today, electricity prices in Germany are at their highest since 2000, while total energy production has hit rock bottom. The energy crisis has hit German industry hard. In October 2024, industrial production fell by 1% month over month, following a 2% decline in September. This sustained drop was primarily driven by an 8.9% annual decrease in energy production. The automotive industry, a key sector for Germany, saw its output fall by 1.9%. On a yearly basis, industrial output declined by 4.5% in October 2024, deepening from the 4.3% drop recorded in September. This decline is not just a short-term blip. It's part of a longer-term trend. Now let's talk about China. While Germany is struggling, China is powering ahead. They're getting gas from Russia and oil from Iran. They're building new coal power plants at a rate that's hard to believe. More than 90% of the world's new coal capacity is in China. They're also going big on hydroelectric power and nuclear energy. All of this gives Chinese manufacturers a huge advantage over their German competitors. But it's not just about energy. China has been playing the long game in industrial development. 20 years ago, China was known for churning out cheap, low-quality goods. Now, they're a force to be reckoned with in high-tech manufacturing. China's industrial strategy has been multifaceted: increased manufacturing capacity, green energy investment, technology acquisition, joint ventures, and automation. Last year, China accounted for more than half of the world's industrial robot installations. Take the car industry, for example. Chinese electric vehicles are now among the best and cheapest in the world. This is a major threat to German car makers, who have long dominated the global auto market. The European Union is so worried about this that they've slapped tariffs on Chinese cars. And it's not just cars. China is leading in many key industries like drones, shipbuilding, solar panels, and wind turbine components. They've achieved this through a clever strategy of buying up foreign companies and forcing technology transfers through joint ventures. China's rise and Germany's struggles are reshaping the global economic landscape. Here are some key implications: shift in global manufacturing, disinflationary pressure, impact on commodity markets, competition with emerging markets, and geopolitical shifts. The changing economic balance between China and Germany could have significant geopolitical implications, particularly for the European Union and its relations with both countries. Germany's struggles are having political consequences. With industry collapsing, nationalism is on the rise. The anti-EU, anti-immigration AfD party has been gaining popularity, especially in Eastern Germany. There's also a new left-wing populist party led by Sarah Wagenknecht, which is anti-NATO and pro-Russian. These political shifts are causing concern for Germany's established parties. The government is already taking steps to limit immigration in response to growing pressure. This is the most severe crisis Germany has faced since its reunification 34 years ago. However, it's not all doom and gloom. There are some tentative signs of bottoming out. Order books are finally stabilizing, showing a clear upward trend since the start of the year, albeit from very low levels. But to see any significant changes, Germany needs reforms, fiscal stimulus, or unexpected respite from external demand, or preferably all three. So what does all this mean for the global economy? Germany's struggles and China's rise are reshaping the industrial landscape. It's not just about who makes what anymore. It's about geopolitical power and influence. As investors, we need to be aware of these shifts and how they might affect different sectors and markets. The story of German industry's decline and China's ascent is a stark reminder of how quickly the global economic landscape can change. It underscores the importance of adaptability and strategic foresight in today's interconnected world. As we move forward, it will be crucial to watch how Germany responds to these challenges and how China continues to evolve its economic model. If you guys enjoyed this video, then you're going to love the electric shift, how China is overtaking the West in EV production. It's a great companion piece to today's topic and will give you even more insights into how China is revolutionizing the automotive industry and challenging traditional powerhouses like Germany. Thanks for watching, and I'll see you in the next video. If you guys enjoyed this video, then you're going to love the electric shift,